Welcome everyone to the Kindle Report. Excuse me. We are live. A lot of folks aren't here. Looks like they're as bored as I was today. We did see some downside action. I've been talking about the markets declining here, and that's my expectation. They're going to continue to be under pressure here, at least down to that 21 period moving average that I discussed yesterday. So not sure there's a whole lot to talk about. We'll go through some economic expectations, and then ultimately we should be able to get through tonight's stream very quickly. I don't see a lot of things to discuss. So let's go ahead and just talk a little bit about economic stuff that's coming out tomorrow. Durable goods is expected to be negative by 1%. FHA housing prices down 0.2. I think Case Shiller comes out tomorrow as well. So it looks like housing prices maybe will start to continue to flatten out. I mentioned in last night's video that what we're seeing here is in the real estate market is a lot of price decreases. The folks that are looking to sell have a reason to sell, and no one's really, I guess, trying to upgrade their house right now because they don't want to get rid of their 2 and 3% loan for a 7. So the cost factors are there, but a lot of new stuff going on as far as that goes. But let's take a look at the other numbers coming out tomorrow. Is the consumer confidence. That's expected to be at about 103.8. Nothing. These are nothing numbers, folks, by the way. There's really not coming out. We did see the likes of Tesla get hammered today. They got a downgrade, and maybe at some stage this week, if we continue to see some of these tech stocks come apart, that maybe we'll cover some of those individually. I'm just like, if you could see my notes for tonight, it's like a blank page. Okay, so. Let me just, we saw the tech stocks down roughly 1%, the S&P down 0.45, Russell up a little bit because the banks rebounded a little bit, but nothing there. As you know, doing the stream at this time of day, I don't have access. The run has not went off for the database. So my expectations are, though, that we'll continue to see some attrition there. We're probably drop below the 60 percentile range tonight and start to see us move in towards some of those numbers I discussed when I went through the database yesterday, around 50, 52, 48%. We should see the short-term database start to unwind a little bit, and I still think the intermediates will stay fairly positive from that standpoint. Just like I said, excuse me, I'm not sure what's going on with my voice. Real estate was up today. Energy and materials actually did fairly good, but we started off like in a fairly strong mode this morning. It was like a decent bid comes in, and then it was just all down from there. And it looks like when you go, I'll go through the hourly chart here in a minute, you'll see that everything's really looking quite negative. So let's go ahead and just get right into the technicals and get through tonight's stream. Shouldn't take long to get there. All right, so we're looking at all of the hourly charts here. You can see the algos are trying to set up some sort. I'm sorry, this is a daily chart that we're looking at. Let me move this over to the hourly. It should have been set on the hourly. Let's go back one step here. Here we go. This is the chart I want to show you. You can see this we've been getting these, what I call these volatility bubbles here. We had one right off the open this morning. That first hour rally ended up to be an RTX sell signal, and we declined all the way down. You can see the algos are suggesting that we're going to continue down in this angle, and all of the PPMs are also looking pretty negative from that standpoint. So there is really nothing to be excited about here at all. We saw a little bit of a uptick here. I think we could rally up toward the 10-period moving average here, and we'll look at the daily market grid here in a second. But probably an R1 number from that standpoint. So we'll take a look at that now. I just expect to see, once again, probably a push up into about an hour or so before the London opening, and just look for a continuing drift as we come into tomorrow. I really think we're going to see a couple of numbers I wrote down that I'll show you here in a minute. But 4340, 4300 is actually a possibility here. So we're going to see, I think, more attrition over the next several days. All right, going over to the daily chart here. You see this nice little drifting. We're coming down. The market grid is suggesting the extreme today. STX is 42.32. S3 is 42.41, but I would look for R1 43.79 to a 43.51 level. We could print all the way down. You can see the algos are just continuing on PPM1. We've broken through first, second derivative. This was being forecasted, if you recall last week, that we're going to roll down into these averages. The 21 still is a plus 0.23, so we've got decent probabilities here. You can see there's only a 40% probability to get through that level at that 21 period moving average, 43.41. And so that's where the moving average is. And you also notice that S3 today is exactly that value. So look for, if we do print down, look for some kind of bounce off there. As I was talking about last night, I think there's a tradable bounce off of this 21. But ultimately, what we end up doing here in this type of pattern is, if we hold the 21, we trade between the value of the 21 simple to the 10 simple. And right now, the 10 is at 44.16. If you notice, we traded right around that 44.02 this morning. It just couldn't get through there early on, and then the sellers just showed up, and we were able to, just looking at the market grid for yesterday, the level we got down to 68, and S2 was 43.70. If you recall, I was calling for an R1, S2. R1 yesterday was 97, but we got R2 was 44.07, so we printed 0.03 even on the upside, and then faded right down into that S2 number. So for today, let's look for R1, S2 again. There is a potential to print all the way down to the STX level, which would be right at that 21 period moving average. If it hits, if something like that happens early in the session, then look for a rebound, and probably, like I said, this should be a tradable pattern, but we're going to have major resistance right at the 4,400, up toward that 44.16 level is going to be pretty substantial from that standpoint. Like I said, this should be very quick tonight. So here's the NASDAQ. We're finally rolling through down toward this 21 here. We broke through yesterday, and now we're looking at the move down toward this 21. What's interesting about this is the NASDAQ is suggesting we're going to break through the 21 and potentially probably head toward the 40 period moving average in this pattern. So I think we finally have reached a little bit of a top and a hesitation here. It looks like we'll be led by the same folks that led us on the way up, is that these large cap stocks will start to pull us back in to the pattern, and possibly if we can get a solid close under the 21, that'll be substantial. The only thing that I will tell you is we still have, there's right now only, there's a 46% probability that we'll actually stay above that level. So we should hold the 21 for today, but the algos are suggesting they're going to continue to burn off this upward momentum. So right now we're at 0.2891 on PPM2. So look for that to fade. And I think ultimately this rising 40 is going to be where we end up going to in this pattern. I mentioned this yesterday, the Russell seems to be leading the way, and we're traded below the 21. Now we're again below it. It's still rising. It's up 0.21, so there's going to be a little bit of a pull up toward this value here at 1849, but most likely we're just setting up a pattern. The market grid turned up, interesting here, where it's turned down on the S&P and the NASDAQ. So maybe we'll see some stabilization here, but the algos are suggesting the same, that at least for the next couple of days we'll be stable on the Russell. So maybe it will continue to outperform a little bit here, and possibly maybe that's a bid in the banks, because we did see a little bit of a bid there yesterday. All right, so we'll take a look at the 10-year. Like I said, it's not going to take long for us to get through this tonight, folks. It's going to be pretty quick. 10-year, as I mentioned last night, we're really just looking at the algos just staying sideways here, and we're most likely the extreme on the downside around maybe 362, 360 is extreme. And we're just going to continue to go right through this pattern here in a sideways mode. I don't see us getting any out of this range at all here based on this. Real quick look at the 2-year. It's still climbing this slight incline here. It looks like we'll continue to stay right above the 10. The 21 should be the bottom end of this. So look at right around the 10 right now is 272. We went out 274. We should continue to climb up just slightly here from that standpoint. Just don't see anything going to budge these things at all, especially with there's virtually no real news coming out as we come into tomorrow. There's not much there at all. So just look for Tuesday to be kind of a quiet day, to say the least. So we saw crude rebound just a little bit. The energy stocks actually did pretty well today. I think roughly up 1.5 plus. But if you look at the algos here, there's just nothing. We're just continuing to drift sideways. I think if we stay in this range, probably 70, 74 is the cap on the downside. Probably the levels that we hit just a couple of days ago are going to represent pretty much an extreme between 70, 78, 68 on the downside. There should be not much to go with there at all. This is just kind of a drifting market, and look at the ranges that we've been in. We're still printing in this same choppy range that this has been going on since May. And in spite of all the OPEC moves and all of this stuff, I would say that the impact was 0.0 on the situation in Russia on the weekend, which was ultimately probably, yeah, I'll leave that alone. But yeah, it was probably a little bit of a false flag there, I believe. But the point is that what we're seeing here is just more drifting in oil. There's nothing there. I'm going to go to the weekly just to get that trend. As I've been talking about, the weekly trend just continues to suggest we're going to drift lower for the next several weeks. So under pressure. If anything, the 40 period moving, the 200 period moving average is going to be right around that 67 level. So just expect that to be the place where we're going to hold. So gold continues to move lower as well. We're down to the 1931. Yesterday we printed down to 19. I'm sorry, this is a weekly chart. So last week we printed on 1919. Let me get over to the daily here. See, we're really just locked in that sideways range here. The 10 period moving average. It's interesting. We're starting to get what looks like we could get a little bit of a rally, potentially up to the 1958, 1962 level, with the potential of getting up back into around 1980. That's if we can get a higher close above this 10 period moving average. It looks like the algos on the dailies are looking to turn around. There's still a fair amount of downward pressure on the markets from a weekly standpoint. All right, so Bitcoin's final market cover tonight, really just looking at this. We got this RXT sell a few days ago. We're sideways in this pattern. Like I've been talking about, it looks like the algos want to test this 10 period moving average, 28,900. We'll call it actually call it 29,000. We get through that, then we're probably going to head toward the 21. The short-term algos on the dailies look pretty negative here from that standpoint. Just don't see anything here at all other than sideways to down. There's still a decent upward slope here where ppm1 is 1.34 and ppm2 is 0.77. So that is definitely still some serious upward trending going on here, but it does look like it's going to dissipate over the next several days. I'll just bring up the weekly because this is where the big action is, but we did get a weekly RXT sell, so we should have 1 to 2 weeks of sideways and maybe moving toward this moving average. And then it looks like on a weekly basis, we're a week to 2 weeks out from that standpoint. Okay, folks, I guess that's going to do it. I told you it wasn't going to take long, probably about 15 minutes or so. I'm not sure there's much to cover here at the moment. The markets are pretty quiet, and quiet from the standpoint of the volatility, but there's just no news, nothing happening right now. So maybe as we get into Wednesday, we'll start to see some things come into play as we get into Wednesday, Thursday's news that's coming out. But other than that, this is the final week of the month as well. And so maybe there's some unwinding to be done. But this, like I said, it looks to me that we're at least have caught a point where we're going to see the markets continue to decline into some of these values that I talked about here tonight, and don't see any big reversals possible. And I'm not sure from the minimal news coming out, anything's out there that's going to be able to trigger a substantial rally of any sort from this point. I still think around 44 on the S&P, 44.16 is going to be your ceiling. And on the downside, we're probably looking at 43.40. There is some potential for a 4,300 level. So I mentioned that number the last 2 or 3 times we've been together. So anyway, folks, that's going to do it. Appreciate everybody showing up. And I know it was quick, but hopefully we'll have something more to talk about tomorrow. So thanks again for watching, and we'll see you tomorrow night. I do not put any of the intellectual stuff out there. Very aware of that. Thank you. Have a great evening.